This is the Sean Hannity Show podcast.
All right, here we are. Happy Friday. It's going to be 87 degrees. Don in Lake Ronkonkoma writes me this weekend in New York, and he goes, yeah, New Yorkers are taxed for Coke and for 7-Up and soda, and maybe we'll be taxed if we put ice in it as well. Well, that's coming. Don't deny the possibility it could exist. All right, here it is, Financial Advice Friday. We do this on the second hour of Friday's program in the hopes that you can navigate your family through these troubled economic times, although the Dow was up today, closing over the 8,000 mark, which is a rarity these days. But anyway, welcome to Financial Advice Friday. All right, the idea is how can we conservatives navigate our families through the financial difficulties we have? Joining us today from the Fox Business Network, Stuart Varney is back with us. And also from the Babb Group, Dani Babb is with us. Guys, welcome to Financial Advice Friday.
Hi, Sean.
Hi,
All right. So the stock market's up today. We're closing over 8,000, Stuart. And all right. So people saying, well, maybe things have settled down. Geithner suggested as much earlier today and yesterday. Your thoughts?
I think that we're bumping along the bottom of this economy and bumping along the bottom of the financial crisis. Do not expect a rapid rebound for the economy. Don't expect a rapid return to health for the financial system. The rest of this year, we are looking at borrowing $2 trillion by the United States Treasury. That's going to have an enormous negative impact on the economy. And we're just hearing that maybe some of those so-called middle-class tax cuts of President Obama's budget, maybe they're going to be rescinded, taken back next year. We're just hearing that.
Yeah, on top of the Bush tax cuts expiring.
Yes, exactly. In other words, the government is going to take even more money off everybody as all kinds of taxes go up, and the government wants to borrow $2 trillion. That's not the kind of economic outlook that produces a big stock market rally in the future.
Danny, I think the Congressional Budget Office has it about right, and that is that we are going to see some type of recovery, probably short-lived, and then ultimately it would have been better off if we had done nothing because of the $10 trillion in debt, the $806 billion on interest alone in 10 years. And that's, by the way, if interest rates stay at their current level. So I don't have a lot of faith, hope, trust, and confidence in the long term. I think in the short term, we might see a little bump here and there. And I think Stuart's right in his analysis. I don't have confidence for the long term.
Yeah, I think we're going to see continued market volatility because we've had 7 straight weeks of stocks going up. Inevitably, people are going to start to profit take, particularly institutional investors. And, I do think long-term recovery is sustainable, but we've got to get the government out of this, and we have got to get taxes low. We've got states now going crazy and following the
But, Danny, taxes are not going to go low. We know for the next 3.5, 4 years, they are not going lower. So what does that mean?
Well, it means that people are going to have to find a way out of this themselves. They're going to have to cut back their own spending, which is going to hurt GDP overall, which is not a good thing. It means that small businesses, which are really taking the brunt of this and are being forgotten about by this administration, in my view, are going to have to take cuts. Will probably end up laying people off. It also means that there are opportunities for people to start businesses, which is a unique kind of niche in all of this stuff. But it means that people, basically, we're on our own. I mean, there's a feeling out there by the government that we're in your corner, but I don't believe that's the case.
Hey, Sean, Americans are not going to stand for this. This is not. We don't want to be like Europe. We don't want to be like Japan. We want to be vigorous, dynamic, expanding, lots of growth, low unemployment, low taxes. That's what America is. That's what America is shortly going to demand. We already saw some of those demands at the Tea Parties on April 15th.
All right, but let me ask you about the long-term sustainability of all this. Do you agree with the CBO? Do you agree with me that I think in the long term we've got structural problems because of the rapid increase in spending and the amount of debt we're taking on?
Yes, I do. I think we're going to look like Japan looked for much of the 10 years after 1990.
So this goes on for 10 years.
Oh, I'm not going to put a time frame on it, but in the immediate future, the next few years, where is the growth, serious growth, going to come from? We had an economy of approximately $15 trillion back in the summer of 2007. We're now down to an economy of around $14 trillion. I'll believe in real long-term growth when we get back to $15 trillion and move up from there. And that's not going to happen for years.
Well, I'll tell you, I told my audience that I took out, when the market hit about 8,200, I took out about half the money that I had in stocks. Because I'm betting that there's probably the stock market will hit 10,000 again, probably 11,000. But I don't have confidence in the long term. And every financial expert told me, look, if you don't need the money in the next 5 or 10 years, don't do that. I dollar cost averaged out a little under 9,000 on the stock exchange, and I did it anyway. Was that dumb?
In my opinion, Sean, it depends on how old you are.
I'm 47 and graying and fat. So
I think you should. I'm with you, bro. I think you should put money back into the stock market because if your retirement money, that's what I'm talking about. You can't touch it for another 10, 15 years.
That's the money I didn't touch, the stuff where I would have been penalized.
In which case, you did the right thing.
But I took any other money I had in the stock market, I pulled.
I think you should think in terms of a little gold, frankly.
Well, I have some. I've purchased gold my whole life in part of just, a small portion of my portfolio. Danny?
Well, the Federal Reserve is flooding the economy with money. Enormous amounts of, as they call it, liquidity is flowing in. That usually produces inflation. Gold goes up in inflation. And did you know that over the last 4 weeks, China has doubled its ownership of gold? It has bought hundreds of tons as a hedge against a falling dollar.
What do you think, Danny?
And interestingly enough, with regard to the stock issue, if you've missed over the last 50 years any 10 days over any 10-year period in the market, there's a 99% probability you would have missed the gains. 10 days is all it's taken in a 10-year period in the market. So I do think that people should have their money in the market if it's in the long term. 10 years or more, you don't need it for retirement tomorrow. And I've been doing the same thing, actually buying up a lot of stocks to hold for the long term. I'm in my early 30s, and I think it's a great time for people like myself to invest in the markets, period.
Yeah, go ahead, rub it in. You're in your early 30s. Go ahead, just Stuart and I will just sit back and take it. Go ahead. All right, let's get to some phone calls. A lot of people are checking in with us here on Financial Advice Friday. We got Bill San Antonio, WOAI, with Stuart Varney and Dani Babb. How are you, Bill? Welcome to the program.
Good. How are you doing? Thank you for taking my call, and this is my question. With such a high GDP and probably an increasing GDP in the future, with all the tax debt we're going to gain, and I don't know if this is correct, but I've heard there's still $60 trillion in bad debt out there in mortgages. How do we expect to pull out of this? I mean, how is our market going to actually recover from this? I mean, not just in the next 10 years, but ever. Is it even possible?
Stuart?
Yes, it's possible, and I wouldn't be so doom and gloomy that we're never going to pull out of this. I'm not so sure about your figure of $60 trillion in mortgage debt. I'm not sure about the exact number, but put it like this: we're going to have to work through all the bad stuff that we've been through in the past 6 months, especially when it comes to failed credit cards, subprime mortgages, and commercial real estate loans. We've got to work through that. I think we're pretty far down the process of trying to work through that, but we are working through it. I'm not going to put a 10-year time frame on this, but I am going to say that for the next 2 or 3 years, it's looking, in my opinion, really bleak.
And there's also, and I'll throw this to Danny because I agree with what you said, Stuart, but there's also a second wave as it relates to the subprime crisis coming, right?
Yeah, there really is. And we actually don't know how much bad debt is out there. The banks have not been upfront about it, and we don't really know what bad debt is. It was bundled with the good debt in a lot of cases to help get a higher price for it on the secondary market. So, to answer Bill's question and your question, Sean, what's coming down the future pipeline in 2009, 2010 through 2011 are jumbo mortgages with people who had negative amortization loans. These are loans that went upside down, and they're about to reset. When that hits the marketplace, we're going to see, in my opinion, staggering home sales numbers, staggeringly low. And we are going to see an incredible amount of homes on the market in foreclosure in an entirely different sector. So we'll have cleaned up a bit of the conventional markets that, hover around the median home price. But the rest of the market, we haven't even begun to see the problem yet.
All right, let's go back to our phones. Kevin is in Hartford, Connecticut, WTIC Financial Advice Friday with Stuart Varney and Dani Babb. How are you, Kevin? Welcome to the program.
I'm doing well, sir. I'm getting married here in just over 6 months, and I'm starting to plan for my future and my family's future. I don't have any kids, but I know they'll be coming. Where should I be going with my funds?
Danny?
Well, first of all, the very first thing I do, congratulations, Kevin. I would get 6 months reserves at least in a bank account in something that's maybe low interest but fairly stable, and that's going to be your backstop. Everybody needs a backstop today. We used to be able to use credit cards and home equity lines to do that, but those are not nearly as accessible anymore. After that, I would go to a local bank, HSBC, B of A, Wells Fargo, some of the big guys, and look at the options that you have to save for your children's your children's college education. I would continue to contribute to a 401k if you have that option. But I would also work on making certain that you and your fiance understand what your debts are so that you can begin to logically pay them down in the order of highest interest. So get a really clear financial picture of what you and your new wife will have together, and then begin to nail down debt and get those 6 months reserves, in my opinion, even before you start to nail down credit card debt if you have any.
Can I just say that Kevin is doing the right thing right from the get-go because he's thinking in terms of saving. He understands that there has to be some discipline in your financial life to save. No matter what your income, no matter what your financial position, don't spend all that comes through the door. Save some of it. If you can accept and acquire that kind of savings discipline, you are virtually home free. You have the correct approach to money. Well done, Kevin.
I agree with that. Kevin, I think everyone, in some way, shape, matter, or form, you save it. I feel bad for the people, though, Stuart, that have saved and have invested, especially those getting close to retirement or those whose kids are getting close to going to college. I mean, now they lost 30, 40, 50% of what they had invested. They did the right thing. They saved their money. They disciplined themselves, and look what happens.
There's not much sympathy for those people out there, is there?
There really isn't.
They don't make that
They don't get a bailout.
All of those people who had a 401k have lost half their money. And if they're in their 60s, they are now looking at an extra probably 5 years of work if they can get it. My heart goes out to him. Really does.
It really does. All right, we'll take a quick break. It's Financial Advice Friday. We continue with Stuart Varney of the Fox Business Network, Dani Babb of the Babb Group. We'll get to more of your calls. 800-941-SEAN is our number. Tonight on Hannity, we have the very latest on the Gitmo. Are they now going to release pictures, and what's the reaction going to be worldwide? And what is the legal authority for doing so? We'll get to all of that, Mike Huckabee, and our legal experts, and much, much more. 9 Eastern, you can always DVR it. Hannity on the Fox News Channel. We'll take a break. We'll come back. We'll continue straight ahead. Hey, we've got a new feature on Hannity.com. And by the way, next week, I think we're going to announce the remaining Freedom Concert ticket sales, and we'll give you the details about that. 8 cities around the country this summer. By the way, we're going to need an outlet and release and some fun this summer, and we've got a great lineup for you. And if you want to get on the list to get some of the remaining tickets, Hannity.com. But we also have the Hannity headlines. And here's the deal. All you have to do, you said it, all you have to do is go sign up. It's absolutely free, Hannity.com. And every day you're going to get the headlines we will be talking about. And it's all at Hannity.com. All right, we continue Financial Advice Friday with Stuart Varney from the Fox Business Network, Dani Babb from the Babb Group, as we check in with Kim, who is in St. Petersburg, Florida, next on the Sean Hannity Show. How are you, Kim?
Hi, Sean. I'm doing great. How are you guys doing today?
Everything's good. Thank you.
I have mainly a comment for people who are like me out here in the country who can totally relate. I actually have a degree in nursing, and I haven't had a job since February the 28th. The situation is I've tried not to go over because I know it really affects your credit if you go over 30 days on paying your bills and your car payments, your house payments, etc. Situation is they send out, HSBC is who has my car, Countrywide who has my loan on my house, and they send out all this information and tell you, that we know you're having difficulties. Can you call us and we can work out a situation or a solution to the situation. It's very, very disgruntling to me because, as an educated person, you call these people, and I can imagine people around the country that are doing the same thing. For example, I called HSBC yesterday to let them know what was going on, and I do have a good bite on a job and probably will be back at work by June the 15th, which is really good.
What do you think, Stuart?
I don't think the good lady has any choice but to call up these credit card companies and make her case. You can't walk away from it. She's absolutely right. You walk away for more than 30 days, it really does affect your credit rating. And in the future, your credit score is going to be extremely important as credit tightens up. I regret to say it, but Kim in St. Petersburg doesn't have much choice other than to do exactly what she's doing.
Yeah, but and these companies, they want to get paid. So ultimately, it's in their best interest to sit down and negotiate with you.
Yes, it is. That is true. But do they have enough people, literally, to sit down and talk with you when there are millions of cases, similar cases? It's like the mortgage business. I mean, are there enough people out there to really go through these bad mortgages, case by case, sit down and work something out? It'll take forever. I don't think there's enough people on hand.
What do you think, Dani?
Yeah, well, actually, my group is called 19 Banks to talk about mortgage modifications, and we have found that 16 of them are so overwhelmed, exactly what Stuart is saying, with these requests, that they now require you to submit it online, the modification request, or to request an extension, or to have, for example, your payment added to the end, if it's your car, the end of your loan, which may buy you a month or two. We have to remember that the banks are being given $1,000 to $2,000 per loan that they either accept delinquent and allow the person to make up the payment or modify their loan. So they are being incentivized, and a lot of loan officers are now in modification instead.
All right, we got to take a quick break. We'll have our longer segment with Dani Babb and Stuart Varney, Financial Advice Friday. Then back to the issue of interrogations. Hannity tonight at 9. We'll continue. All right, now let's continue. It's Financial Advice Friday. We're going to get back into the very latest on the interrogation issue. Of course, tonight on Hannity at 9 on the Fox News Channel, the administration is now going to release more photos of the interrogations. Why would we do that? How do we define torture? We're going to raise those questions and much more coming up at 9. Mike Huckabee among our guests, but we continue with Stuart Varney of the Fox Business Network, and Dani Babb is with us. All right, guys, back to our busy phones. Robert is in Houston, Texas, KTRH. Robert, welcome to Financial Advice Friday.
Yes, hello. I'm kind of your poster boy for being 66, fat, gray, and unemployed. I worked for the same company for 20 years, got laid off, lost my pension, but got my profit sharing. I invested in it for $100,000. It went down to 60. I sold all out. I have the money at 2% in my brokerage account, so I'm out of the market totally. But I'm in cash at 2.5%.
What do you think, Stuart?
Look, I got to say that I think the gentleman, Robert in Houston, did the right thing, because at that age, at the age of 66, you don't want to take risk. You're taking the last $60,000 out of what you've got left. That's what you've got. Don't start taking risk at this age. It's not a lot of money, but you'll sleep well at night getting your miserable 2%.
Hey, Robert, let me ask you a question. Robert, are you still capable of working? I mean,
I'm working part-time. I even wrote a book. The book's doing fairly well, but I'm doing part-time jobs at restaurants and things like that. I'm not giving up, Sean. I won't give up. I'm a good conservative. I got my daughter in her junior year of college, and I set that money aside, so that's done. But it's just me.
Well, I got to be honest, Robert, your story is the type of story that breaks my heart, because, here you saved all this money. Here you work for a company your whole life. Here you lose half your retirement. Then you lose half of what's left and your profit sharing. I mean, it's heartbreaking that at 66 years old, you now have to contemplate going back into the workplace. It's heartbreaking.
Just do one thing for me. Buy my book.
What's your book? Let's give a plug for your book. What is it?
It's called Think or Lose Everything. If you look at the cover and the back, you'll love the book.
Where is it? Is it on Amazon?
Amazon.
All right. Well, look, I haven't read it, and I hope it's a good book. But I'm gonna have Alicia go, and we'll buy a copy to at least support you and wish you all the best, and good luck with your daughter too.
I was at the Tea Party in San Antonio. It was a great event.
Well, appreciate it. Thanks, Robert. Appreciate the call. 800-941-SEAN is our toll-free telephone number. We got Tom in Palm Desert, California. Tom, you're on with Dani Babb and with Stuart Varney on Financial Advice Friday. Hi.
Good afternoon. Thank you, first of all, for taking my call and for doing this segment. It's great. My question is, several years ago, I lost a job for wrongful termination. I'm getting ready to settle a suit. Settling for a fair amount of money, $2.3 million. I'm in my mid-50s. I have 2 adult children and 3 young children at home. I lost everything over the last several years. And I'm starting over again. I do not want to go crazy, but I want to take care of my adult children. I want to reestablish the 529 for my little children, and and also give to charity. And I need some advice on where to go with this money, how to make sure that my family and my wife's family is taken care of, and that my younger children will always have something.
All right, Dani?
Well, first of all, Tom, I think that you might want to consider setting up a trust, and I would work with an attorney on doing that. You know, some of the safer routes to go here are mutual funds, obviously. But one thing you might want to consider, I've been advising some of my close family to do lately, is to take some of that money and maybe buy the adult children some homes at exceedingly low prices, particularly in the area of California that you're in. I don't know if your family's in the same area, but if they are, you get an exceptional deal, and that's something that they can hang on to for the long term, and it might be a way to pass on some of that to your children in the later years.
Do I do that through the trust?
I would do it through a trust, absolutely. That's what I've done myself.
What do you think, Stuart?
Sounds like a very good idea to me. I would put a third into the kind of real estate that Danny's talking about. I'd put a third into stocks because at 55, you've got plenty of time to see those stocks go up over the next 10 years, and I think that will happen. I'd put a third into bonds, high-quality bonds, which you hold to maturity, and take your 5, 6, 7% out of them, and then they hold to maturity, and you don't have any risk of loss.
Appreciate the call. Thank you. Patrick is in Chicago, WLS, Financial Advice Friday, the Sean Hannity Show with Dani Babb and Stuart Varney. How are you, Patrick?
Sir, I'm good. Thank you for taking my call.
Yes, sir. What's going on?
All right. I'm in college. This is my first year. I'm 23. I managed to save $17,000 while in the service and my first year of school. I was wondering, with the economy the way it is, should I invest and maybe try and make some money, or just hold on to it and play it safe? And also, I plan on going to law school, sir, so I want to keep that down the road.
Well, you may need that money, in other words, for law school at some point, right? So you may need it sooner than later.
Yes, sir.
What do you think, Stuart?
Yeah, you're right, Sean. He might need this money pretty soon. Don't take a risk with it. Don't put it into the stock market, not in my opinion. If you're going to need that money, say, in 1 or 2 years' time, what is wrong with buying a short-term quality bond, hold it to maturity, take 3 or 4%, walk away, sleep at night?
You know what? I think that's pretty solid advice. Now, just if he wasn't planning on law school and maybe he had just gotten married and he was at his age, then you probably wouldn't advise him to go into the stock market, right?
No, sir. I would say get out there and buy a house.
Well, then that's a good point, too. No, I'd say go buy a house, too. All right, I stand corrected, Stuart. Thank you, Patrick. Appreciate it. As we check in with Tim is in Florida, next on the Sean Hannity Show with Dani Babb and with Stuart Varney. How are you, Tim?
I'm great. Thanks for taking my call, guys. I just got a quick question for you. My daughter just started her career. She's out of college and started her career. And the company she's working for, their 401k goes through AIG, and she's asking me what to do. And so I'm asking you guys, should we go ahead and start investing in that or do something on our own?
Danny?
Company match, I would absolutely go for it. She's too young not to.
Oh, yeah. Out of the question to turn this down. That's found money. They are giving you money. And at that age, you've got 40 years to see it accumulate. Take it.
All right.
Okay.
Thank you. 10 days.
Appreciate the call. Thank you, Tim. As we go back to our phones, Christy is in Tucson, Arizona, KNST, on Financial Advice Friday with Stuart Varney and Dani Babb. How are you, Christy?
I'm wonderful in this beautiful city. I heard him talking to that 66-year-old gentleman, and he said that was too old to be risking stock, but yet the 55-year-old gentleman, it wasn't. And I was wondering, what is the age that you stop taking risks?
Christy, I'll tell you straight. I'll answer that one because I'm the one who said at 66, don't take any risk. At 55, right, take a little bit of risk. Well, I'm right in the middle. I am 60 years old. I want to really run down my risk. I don't like risk at my age because you never know when I would want to retire. So I'm the kind of guy who runs down his risk, avoids a lot of risk because I am 60 years old. I would date it to the year 60.
By the way, you don't look a day over 47. It's unbelievable how good you look.
Oh, Sean, you flatter me.
Does that answer your question,
yes,
Christy?
It does. Thank you very much.
All right, appreciate it. As we go to Don, also in Florida. Don, welcome to Financial Advice Friday with Stuart Varney and Dani Babb. How are you?
I'm doing fine, Sean. Thanks for taking my call. I got a quick question. I'm currently 44, and I've maxed out my 401k contribution. I'm at the 6% with my company. And I currently get double E and I bonds. And my question is, should I continue with that? Or should I take the money from the E and I bonds and put it into a money market or savings or a CD?
Danny?
At 44, I would take it out and I would put it into high-growth stocks, actually.
What do you think?
Okay.
Like what? What kind of stocks?
a company that you know something personally about, that you understand the industry, whether it's in technology, in green technology, in information technology, or in healthcare, areas that we're actually, I think, going to see some expansion in the future. Also, online education, which is a huge one.
All right, Don?
Okay, thank you very much, Sean.
All right, buddy, appreciate the call. Thank you. Jill is in Akron, Ohio, next on the Sean Hannity Show, Financial Advice Friday. Dani Babb, Stuart Varney. How are you, Jill? Welcome to the show.
Wonderful. Thanks for taking my call. I just got married, and we're looking into establishing life insurance policies, and I was just hoping for some advice on which way to go. I know there's different options.
Well, you're talking about whole life, term life insurance, Stuart?
Exactly.
Please, can I hand that one over to Dani? Insurance is not an area that I'm real happy and comfortable with.
What do you think, Dani?
Yeah, I'm in my early 30s. Oh, I guess technically mid-30s now. I don't know.
And by the way, why don't you say that anymore on the program? Just remind us how old we are. Go ahead.
No, I'm trying to compare to Jill. Jill, how old are you?
How
32.
old are you? You're 32, Jill?
32. Okay, so we're about the same age. I'll tell you what I did. Our chance of dying, we have a greater chance of being struck down by lightning than something random happening to us. So I did this. I actually went and bought term life insurance from Northwestern Mutual. I was able to cover all of my assets. I got an $8 million policy for $200 a month because I'm in decent health. The only thing that really tends to change that is if you're a heavy smoker. If you are, you might want to quit before you apply. Other than that, I would say stick with term. Don't put your money, don't give your money to these guys. When I went back to them and tried to find out what my other options were, and I actually calculated the rate of return, it was about 2%. It's ridiculous. They're making tons of money off of you. I'd stick with term myself.
Now, by the way, and Jill, I want to tell you, early in my 30s, I got some term. I got some term in my 40s, and I got some term when I was about 45. So, I mean, that's the way that I went also. So it's a lot cheaper than whole life, and it doesn't seem whole to be a great investment to me. So I don't know if that helps you out a lot. And you know what? I think it's great that you're thinking about your family, and you know, if a worst case scenario ever happens, and God forbid that lightning did strike you, you want to take care of your family.
Exactly.
All right.
Thank you, guys. I appreciate your time.
All right. Thank you. Appreciate it, Jill. Susie is next in Tustin, California. Susie, you're on Financial Advice Friday with Dani Babb and Stuart Varney. How are you? Are you there, Susie?
I am here.
What's going on?
I'd like to know what advice they could give for a 65-year-old widow with 2 annuities with large insurance companies, some savings, and a home.
Do you have any worries about those annuities with the insurance companies?
Yes, I do.
What kind of worries do you have, Susie?
Just that they're losing money.
I'm not sure that you can take out money from the annuities you've got. I'm not sure you can cash them in. I think you've got to live with your worry, I think.
Dani, real quick.
Yeah, that's my understanding, too. If you can, and if you've got debt, I would do it and pay off the debt. But my understanding is you can't take that out. I would, if I were in your shoes, I would work on establishing a home equity line. If you have any equity in your home, I know the Tustin area exceedingly well. Some of them are in declining market areas. If you can't get a HELOC, I would get one, home equity line of credit as a backstop in case you need cash down the line. Other than that, I'm with Stuart.
All right.
And how about reverse mortgage?
We only got a second here, Stuart.
The costs are huge. Watch out for that.
Absolutely.
All right. We have a total, complete agreement there. Guys, thank you very much. Stuart Varney from the Fox Business Network, Dani Babb from the Babb Group. Guys, very enlightening, very helpful, and we really appreciate it. I mean, people are very concerned about the economy and about the money that they have, the wealth that they have created, how to save it, how to preserve it, and you guys are helping a lot, so I appreciate it. Thank you.
Sean.
Thank you.
All right, guys, 800-941-SEAN is our toll-free telephone number. Now, when we get back, we're going to get back to this issue of the administration is going to release more photos of these interrogations. Why would America do that? And why focus on apologizing for America? Why making us look bad at every turn in the road? We're going to deal with this tonight on Hannity on the Fox News Channel. How do you define torture? We'll delve into that question. Mike Huckabee, Kimberly Guilfoyle, S.E. Cupp. I mean, we got a great line. Michael Strahan is on. Miss USA is going to be on, former Miss USA. So that's all coming up tonight. Hannity on the Fox News Channel. You can always TiVo in DVR, but we'll hit the news of the day on interrogations next. We'll get to more of your calls. 800-941-SEAN is our number as we continue on this beautiful Friday in the Northeast. Straight ahead. All right, we went long on Financial Advice Friday. When we come back, why the administration would release photos of the interrogations, why this apologizing for America goes on and on, why making us look bad. We'll also deal with that tonight on Hannity on the Fox News Channel 9 Eastern. Mike Huckabee, Kimberly Guilfoyle. How do we define torture? We'll get into that question tonight. And also, how do you celebrate Earth Day? 9,000 gallons of Obama jet fuel. That's right, so you can talk about carbon footprints. All right, that and Michael Strahan tonight at 9, and you can always DVR it. But your calls, the latest on interrogation, next.